Hello and welcome to episode 40. This week we reveal who won the battle between the digital document companies Adobe and DocuSign. We have a portfolio check-in and we battle two more stocks against each other with this week's theme of the best solar companies. Without further delay, let's get underway. Every week we invest £25 into each portfolio. One portfolio where you select the stocks, one that tracks the market, and one that generates income to pay to you. We'll then invest an extra £1 into each portfolio for every 100 subscribers we get. Last week we looked at digital document companies, and to be honest, even just saying that is giving me a bit of PTSD. It was a hectic week at work and I was using both of these products a lot more than I would have liked to. But it shows there's definitely a market and there are always going to be consumers for these sorts of products. However, there can be only one, and the winner last week was Adobe!
3, 2, 1, go.
Last week was incredibly flat, with the benchmark and the Battle Royale amazingly able to make a return of 0.0%, and the income generator was down slightly, minus 1.3. This week, however, it's been a fantastic week in the markets. So pleased. Income generator up 0.4, benchmark doing well for us, 1.6%, but the Battle Royale up 4%. That's amazing. Not is it a good return, but it's given us confidence that we're doing the right thing and making the right choices, so let's just keep on going. Looking at the biggest movers in the portfolios this week, and Dick's Sporting Goods, an amazing turnaround, up 16.9%. Now, it's been falling and we're actually still down on that stock, so not as good, but always fantastic to see a stock rise that much. TriStill up 13.7%. I got to give it to the guys at the Playing Footsie podcast. They called a good company there, and that's on the bounce. On the downside, very minor losses, 1%, and 2.2. Games Workshop, Gulab Capital, and no surprise, the most volatile stock in the world, Black Rifle Coffee. And there it is in all its glory, the Battle Royale up 4% over the last 7 days. It's a growth portfolio with a solid track record. Looking at the total return of each of our holdings, On the Beach still out in front with a 94.3% return. Scrolling down, you'll see some familiar names like TriStill, everyone knows Tesla of course, Nvidia still in the green for us. Going down further, Tesco's doing okay, 3i Group up almost 6%, and it's quite a lot in the green. However, of course, there are some in the red. Adidas down 10%, Apple down 12%, that's impressively bad for such a good company. Dick's, there it is, up 16.9% on the week, but minus 11.6% for us. Our £25 has turned into £19.54. Reddit doing quite badly for us as well. Tate & Lyle, B&M, and Black Rifle Coffee. That brings us to a total of 38 holdings now. Incredibly, 21 of them are in the green and only 17 in the red. Our income generator is also doing its job well of bringing us in dividends. We're up to £30.26 annually. That's up from £29.46 last year. Our next payment in July is going to be £11.05, and the one after that in September is £6.35, which leads us a grand total to be paid out of £17.40. We've now invested £950 into each of our three portfolios, and last week I was pretty happy with how things were looking. Nothing spectacular. The income generated down marginally 0.2%, but the benchmark was up 0.2% and the Battle Royale was up 1.4%. This week, however, completely different story. The income generator relatively flat, but up 0.1%, and that makes all the difference. The benchmark, though, 1.8%, so finally making us money. However, the Battle Royale up an incredibly, amazingly good 5.4%. And our grand totals, therefore, we've now put in £2,784. It's returning us £64.96, a total return of 2.5%, and our estimated dividend per year is £70.28.
3, 2, 1, fight.
It is hot, hot, hot in the UK as we go through yet another heat wave. I know there are other people that are laughing at us that this is a heat wave, but hey, we'll definitely take it. And unsurprisingly, that's got me thinking about the sun. and how we can use the sun to make money for us. So I decided to look at solar companies this week. In addition, there's a bit of pressure on renewable energy in the US with potential policies that might come out. So it could be a good time to jump in on that negative sentiment and maybe pick up a few good deals. Of course, it could also be the worst time if those policies do come in and compress that market. However, as usual, we're only going to look at good companies that have a great long-term future, and hopefully we'll make the right decision and pick the best one. So come with me and let's take a look.
First up, we have the very appropriately named First Solar. It's a surprise, surprise, solar company that provides solar energy solutions in the US and elsewhere. It is trading at 27.8% below simply Wall Street's estimate of fair value, and that translates into a 12.9% PE ratio. Past performance looks pretty healthy, and excitingly, the future growth is pretty solid as well. 22.5% earnings growth rate and 21.8% EPS growth rate. It's not paying a dividend, as it is hopefully a nice growing solar panel company. Next up, we have the also appropriately named Next Tracker. This is also a solar company, however, this is providing solar tracker technologies and solutions for utility scale and distributed generation solar applications in the US and internationally. But more of a mouthful. It's also trading below simply Wall Street's estimate of fair value, 24.9%, so pretty much the same for all intents and purposes as First Solar. That translates into a 16.9 PE, which is slightly higher than if I flick back over to First Solar, it was 12.9, so Next Tracker is slightly more expensive. However, it did have a very good past performance, particularly on the earnings side, not necessarily so much on the earnings per share side. And if we flick back to First Solar, that was positive on both 39 and 39. So it's just whether or not you think Next Tracker is going to increase those earnings and be the better company long term. Future growth, it is single figures. So again, that's up to you to decide which you think is better. Similarly, it doesn't provide a dividend, doesn't pay a dividend, nor does it buy back any of its shares. This is still a company in its growth stages. So I think a slightly easier one to choose from this week between First Solar and Next Tracker. I know who I'm voting for. Please let me know who you are going to vote for in the comments.
So there you have it. Which of the two do you think we should invest in? Have a look in the comments next to the company you like. Pop a thumbs up next to them. The company with the most votes is the one that we will invest in. However, my vote this week is going to go to... It's been a great week in the markets. The weather's good. People are having barbecues. And I just hope everything's going well with you generally and specifically in the markets. And I look forward to seeing you all back here in another week's time to see how we've got on. Have a good week, everyone.
Goodbye.